Okay, so the two programs we're going to talk about are the Economic Injury Disaster Loan, also known as the EIDL or EIDL loan, and we'll also talk about the PPP or Paycheck Protection Program. So I have those two loans side by side here on the screen to kind of compare the basic information about them, and then we'll go into more detail here in just a minute. And I will also walk you step by step through the process of applying for the Economic Injury Disaster Loan. So on the left side of the screen, the Economic Injury Disaster Loan, you apply online directly with the SBA. So this is not through your bank, this is strictly through the SBA. The SBA administers these funds. And small businesses, as well as 501Cs, 501Ds, and 501Es can all apply for the disaster loan. Agriculture businesses cannot apply for the disaster loan at this time. The disaster loan can be used for accounts payable, as well as payroll, rent, and utilities. So those are the approved purposes for the EIDL loan. Accounts payable includes any of the vendors that you owe, as well as any existing loans that you may owe. You can use the disaster funds to pay for your existing loan. The most you can get from the disaster loan is $2 million. And the loan is for 30 years at 3.75% for small businesses and 2.75% for nonprofits. So I want to point out that when I say small businesses, most people recently have learned that small businesses is less than 500 employees. However, depending upon your industry, it may not be an employee amount. It may very well be a gross revenue amount. So keep that in mind, that's a general definition, that small businesses are 500 or fewer employees, but you need to double check with your particular industry code or NAICS code to find out for sure if you are considered a small business or not. So the other program is the Paycheck Protection Program. This one you apply with your bank. So this is not through the SBA, it's guaranteed by the SBA. The rules come from the SBA, but you actually get the money from your bank. Again, small businesses can apply for this, as well as 501c3 nonprofits and 501c19, which are veterans organizations. So those are the ones that are eligible for this particular program. You may use these funds for payroll. 75% or more is needed to be used for payroll. You may also use these funds for utilities, rent, and interest on loans that you have, mortgage and other loans. The maximum amount that you can receive from the Paycheck Protection Program is $10 million. And for the portion that is not forgivable, and we will talk about that, the portion that's not forgivable is turned into a 2-year loan at 1% interest rate. So that was the final rate that was given by the SBA as of 6:30 last night. Okay, so I'm going to walk you through actually filling out the application for the disaster loan. So this will only take about 5 minutes, and then the rest of the time we'll talk about the details of the disaster loan, the $10,000 advance you can receive forgivable for the disaster loan, and we'll also then talk about the Paycheck Protection Program in more detail. So this is what you'll see when you go to SBA.gov. The first thing you have to do is what they call disclosures. So you have to select that you are either a business with less than 500 employees or one of these other entities that are eligible for this particular disaster loan program. So for most of you watching, that's either going to be a 501c or a small business. So you would check this very first box here, little circle. Then you will have to check and review all of the following. So all of these little boxes must be checked that states that you understand that you're getting a loan, that you're not engaged in any illegal activity, that no principal of the applicant with a 50% or greater ownership is more than 60 days delinquent on child support, that you're not an agricultural entity, that it's not for something that the SBA never approves, which is for things like gambling and that kind of thing, that you do not derive more than 1/3 of your gross revenues from gambling, that you are not a lobbyist, and you cannot be a state, local, or municipal government entity or a member of Congress and apply for this. So very straightforward. And then you'll have to give your business information. So this is, the application itself at the very beginning says that it takes up to 2 hours to complete. It takes you about 10 minutes to complete in reality. So I'm not sure how they get their calculation, but it does not take very long to complete. So you're going to enter your business name and information like your employer ID number or your social security number if you're a sole proprietor. And yes, sole proprietors and subcontractors, people who are self-employed, may also apply for the economic injury disaster loan. That is considered a small business as well. You have to answer if you're a franchise or not, what your gross revenues were, what your cost of goods are, if you have rental properties, if what you're applying for is a rental property. And then down at the bottom of the screen in red text, you'll see that it says combined annual operating expenses for the 12 months prior to the date. That may be covered up for you guys, but it says for all secular, social services, and religious entities. So you do not fill that out unless you are as a nonprofit or religious entity. So that one you can skip over if you're just a small business. And then over on the right-hand side of the screen, you'll see, again, if you are faith-based, what kind of services you provide. And then just give, you know, your business address and information, when you were established, and current ownership. So I get some questions about this, the date the business is established versus current ownership. So the business may have been around for a long time, but maybe a new owner has come into play in the last few years. So that's why these are two separate questions. It's possible for most people this will be the same date, but for other people it may not be. So the date the business established is when it first started. Current ownership is how long you've actually owned the business since. The type of activity that you do, such as retail or food, restaurant, whatever the case may be, and then some additional information about what business activity you do. You will also have to list out at the very bottom here, you'll see the number of employees on the bottom right, number of employees as of January 31st, 2020. So full-time equivalents is what they're looking for there. So again, very basic information that you need to give. Okay, then you'll have to give information about the business owners. So who they are and just general information about them, their place of birth, their social security number, and what percentage they own. Anyone that owns more than 20% of the business has to be listed as a business owner for the disaster loan. So additional information that you'll be asked for: gross revenues and cost of goods sold. If you're a service business, chances are you don't have any cost of goods sold because you don't have inventory. There may be a few exceptions to that, but for the most part, if you're a service business, cost of goods sold is 0. You'll have to provide any information if anyone helped you complete the form. And then at the very end, in a bold text, you will be asked if you want to be considered for the $10,000 advance that is 100% forgivable. So if you check that box, then you could potentially receive up to $10,000, and that is a grant. That $10,000 does not have to be repaid as long as you use it for the purposes it was intended, which again is for accounts payable, rent, and utilities, as well as payroll if you want to use it for that. And we'll talk about that in a second too, why you may not want to use this particular loan for payroll. You'll have to give your bank information. So it's going to ask you for your routing number and your checking account number that you want the funds deposited into. And then basically you just read the statements, make sure that you've reviewed everything and it looks correct, and then you submit it. For the people that I have worked with who have submitted this, they have not received, since the ones who have submitted it since Monday, which is when it first became available online, they have not received any information. They have not received their advance. They have not received information that it's being reviewed. They haven't, only one has even received an email. The rest haven't received anything. So we've asked the SBA about this. The SBA told us directly that the reason that people haven't heard anything, or most people haven't heard anything, is because their internal system where they collect this data from you is crashing on a daily basis still. So it's just not up for the capacity. They're working on that. But so just be patient once you fill this out. Okay, here are the frequently asked questions about the economic injury disaster loan direct from the SBA. We talked about the $10,000 advance that is forgivable if used appropriately. We do recommend that you document how you utilize that grant, because it is intended to be used for your business, not for you personally, not to go out and buy a new car, but to use it as it's meant to be used. So just document how you utilize those funds. Anything beyond the $10,000 advance that you may receive is considered a loan. And that goes back to that first slide where it's a loan for 30 years at 3.75% for small businesses, 2.75% for nonprofits. If you receive more than $25,000, the SBA does require collateral to be secured for whatever collateral you may have. They will not utilize your home or real estate for collateral for the disaster loan. But any furniture, fixtures, and equipment that your business may own that shows up on your balance sheet, they will utilize that as collateral. On the application form, you'll notice the one thing that they did not ask for is how much money you would like to receive. That is because the amount you receive is calculated by the SBA. So you don't request the amount. They tell you based upon your expenses that you entered from last year and your cost of goods. They determine what 2 to 6 months worth of operating expenses are for you. And based upon your ability to repay the loan over a 30-year period, that's the amount that they will tell you you can potentially have. So you are under no obligation to accept all or any of the funds that they say you can have. There's also no fee to apply, and there's no prepayment penalty. So if you do accept the funds and you decide to pay it back before the 30 years, there is no prepayment penalty for doing so. Okay, so again, taking a look at these two loans side by side, we just walked through how you apply for the economic injury disaster loan. And if that seems super easy, it's because it really is. It is just very basic information. It only takes about 10 minutes to type it in, 5 minutes if you're a fast typer. And so you can use those funds. But now we're going to talk about the Paycheck Protection Program. So keep in mind the people that are eligible for this are also small businesses, but only 501c3 nonprofits and 501c19 veteran organizations. Those are the only two types of nonprofits that can apply for the Paycheck Protection Program. Excuse me, and this is meant specifically, the main purpose of this is for payroll. And this is only a 2-year loan for the portion that's not forgivable. Okay, so there are 2 dates for the Paycheck Protection Program for the application. And today is the first day that anyone can apply for the Paycheck Protection Program. The final application came out last night. So if you fill out an application for your bank before that, they will probably be contacting you to come in and re-sign a different application form. April 3rd is the date that small businesses, LLCs, S-Corps, partnerships, C-Corps, all of those, and nonprofits can apply. April 10th is the date, which is a week from today. That is the date that sole proprietors, self-employed, and subcontractors can apply for the Paycheck Protection. So if you are self-employed, then they're saying you're not supposed to be able to apply today. You have to wait another week because there's a special form, a special application for you. So I am going to now share my screen that shows the actual Paycheck Protection application. Here it is. This is the final form that came out last night. So the form itself is very straightforward. You get this form from your lender. It is online too, but your lender will have this. So you enter your business name, a DBA if you have it, your federal ID number, business, phone, email. You can see all the normal stuff there. Top left here, you're going to check what type of entity you are. And then as you can see, right here at the very top of the application, it's going to ask you for your average monthly payroll. And then you're going to multiply that times 2.5. And then you can also add in your EIDL, which is the Economic Injury Disaster Loan, as well as your monthly amounts for lease, mortgage interest, and utilities. So that amount will also be added in, and that will give you the maximum amount that you can receive. It will be up to your bank to determine if you can receive the maximum amount or not. And you will also be asked for your number of employees, which is full-time equivalents. So part-time and full-time, then calculate what that full-time equivalent is. So a lot of people have asked about this box here, the average monthly payroll. How do I calculate that? You were in business last year between the dates of February 15th and June 30th. So if you were in business during that time, then what you're going to do is take last year's payroll, your total payroll for all 12 months, divide that by 12. That gives you your average monthly payroll, and that's the number that's going to go here. There's a little bit more that goes into that, and I will show you that here in just a second. Okay, we're going to go back to my PowerPoint here. Okay. So when you go to your bank to get the Paycheck Protection Program, you will need documentation of your payroll, like I said, for the last year. Documentation can include your 941s that you filed, your actual, if you have like someone who does your payroll for you, then they can print out a list of all your employees, the hours they worked, how many employees you have. That's the type of documentation you're going to need. And then of course, any other documentation you have for utilities and leases and rent and your mortgage interest. So payroll, how do you calculate your payroll costs? Is it just wages? It's not. It actually includes pretty much everything. So it includes your health insurance premiums, tips, commissions, all wages, state taxes, retirement benefits, vacation, and sick time. So when they say payroll, they're talking about the full amount that you pay. So the health insurance premiums that you pay for your employer, the state taxes that you pay for your employee, rather, and so forth. There is an asterisk here beside $100,000 salaries. So anyone that makes $100,000 or more, above that $100,000 is not included with your payroll calculation. So for the purposes of this program, any of your employees or owners that receive a paycheck who make $100,000 or more, you have to cap it at $100,000, which is $8,333 each month. So that's the most any employee can be counted for as far as payroll goes. So we already talked about that you can receive 2.5 times your average monthly payroll plus the other expenses. And it is processed by your bank, which means that your bank's timeline is what applies. So if you're curious how long it's going to take you to get these funds, that will depend completely upon the length of time it takes your lender to process the application and get the funds dispersed to you. And once the funds are dispersed, you have 8 weeks then to utilize the funds for the uses that you specified. And the funds are forgiven if, show you this at the bottom here, these funds are forgiven if 75% or more is used for payroll and the rest is used for the other specified uses. So as long as 75% of it was used for payroll and the rest was used for the appropriate uses like your lease and mortgage interest and utilities, then it is 100% forgivable. So if, however, you do not use at least 75% of the funds that you received for payroll, then the difference between that and the 75% cutoff will turn into a 2-year loan. So let's say, for example, you have 75% is supposed to go for payroll, but you only use 60% of it for payroll, and the rest goes to utilities and rent and stuff like that it can still go for. Well, since you didn't use 75% of it for payroll and you only use 60% of it for payroll, 60 to 75 is 15%. So 15% of your loan, of your Paycheck Protection Program, will now turn into a 2-year loan at 1% interest. Okay, additional information. This has been a big question. Can you have both an economic injury disaster loan and a Paycheck Protection Program loan? Yes, you can. And that was defined definitively last night with the SBA guidelines that came out. Here's the catch. If you have an economic injury disaster loan and you used some or all of that disaster loan for payroll, then you must refinance or roll into, you must refinance the EIDL into the Payroll Protection Program loan. So that's only if you received those funds by today. So as far as I know, for everybody that's listening out there, no one in our community has received an EIDL yet. So really this doesn't apply for you. But if you did receive one already and you used it for payroll, then you must roll that into your Payroll Protection Program, which means that instead of it now being a 30-year loan, it's now a 2-year loan at 1% though. So, but that is minus the $10,000 forgivable amount. So the $10,000 is forgivable no matter what. The Payroll Protection Program, if you have a felony within the last 5 years, you are ineligible. And the SBA is double checking on this, but as far as we can tell, agriculture programs may apply to the Paycheck Protection Program. They are excluded from the disaster loan, but they are double checking right now to make sure that they can access the Paycheck Protection Program if you are an ag business. We've had a lot of questions about when is the Paycheck Protection Program forgiven? This has not been made clear. So in the guidance that came out last night, there was a nice little sentence that said that there would be more guidance regarding the forgivability of the loan shortly. So we will know soon exactly how and when they're going to forgive that. The hope is that they will forgive it at the end of the 8 weeks. You show your documentation to your lender and you're done with it. If that's not the case, the Paycheck Protection Program is deferred. Any payments on it are deferred automatically for 6 months. So no matter what, there won't be any payments that you have to make for at least 6 months. On the disaster loan, payments are deferred for a year. If you have more than one business, can all of the businesses apply? Yes, as long as each business has its own federal ID number. So if it has a separate federal ID number, then each business can and should apply. Can I use the Payroll Protection Program and the payroll tax credits for required sick pay and EFMLA? So the Extended Family Medical Leave Act and the required sick pay that came out and is in effect as of April 1st, you can receive payroll tax credits for that. And we had a webinar on that a couple of weeks ago. So can you use those tax credits as well as the Paycheck Protection Program? Yes, you can, but if you use the payroll tax credits, then you have to subtract out the tax credits you used from the portion that's forgivable of the Payroll Protection Program, because otherwise you would be double dipping. So you may use them both, or you can just choose to use one or the other. Either way, you're getting 100% back from what you've paid your employees. For the Payroll Protection Program, the forgiveness is reduced if you decrease your full-time headcount or you decrease wages by that's a typo there. It should be by greater than 25%. So if your wages decrease by greater than 25% once you receive the PPP, or if you decrease your full-time headcount once you receive that program, then the forgiveness will be reduced as well. Okay. So that is what I have for everyone. Now I'm going to look at the chat to see what questions we have. And keep in mind, a copy of this will be sent out to all of you, as well as the application, so you can take a look at it in advance of going to your bank. So a question is, if you're a one-member LLC, would you select the first option stating that you're in it? If you're an LLC, you just select LLC. You don't select sole proprietor. How many hours do they consider full-time? 36. And if someone does your payroll for you, they should kind of have that in mind. But the federal regulations, 36 or more hours, regular hours is considered full-time. If that has changed, I will follow up after this with an email letting you know that. So the ownership for a nonprofit, that's a good question. Nonprofits don't technically have an owner, so you fill it out as whoever the CEO is would go ahead and fill out the form. There is no personal guarantee on the form, so you are not required to be personally liable for it, and there is no collateral required for the Paycheck Protection Program. They're asking if your cost of goods and revenue are for calendar year 2019, or if it's from February 2nd of 19 to January 31. You can give calendar year for 2019. There's nothing that stipulates it has to be a separate date range. The previous year is how the guidelines are written. If you don't have employees and it's ran by owners, do you put 0 for employees? You do. And then you would still have to show evidence of how you pay yourself if you don't have any employees. But as long as you have documentation of that, then that's what you'll take to the bank to apply for the Paycheck Protection Program. Independent contractors are not considered employees. Independent contractors can apply for the Paycheck Protection Program and the disaster loan both themselves, so they are not considered employees. Someone asked if they've already completed a payroll protection plan. I'm assuming they're talking about their application. Do they need to do it again? I'd contact your lender and find out if they're going to have you my guess is yes, you're going to have to refill it out. They might fill it out for you and just have you sign the new application. So when you talk about temporary employees, it depends on how they are. Seasonal employees are a little bit different and they're calculated differently. But if they're temp employees, meaning that the employment agency that you contract with, that's who they actually are employees with, not with you. So you get an invoice from the employment agency. So that would be your vendor. And so those people aren't actually your employee. They are the employment agency's employee. So they do not count towards your employee headcount or payroll. They do count for your accounts payable, though, for the disaster loan. Question, is employer FICA included? Federal taxes are Medicare and Social Security are not included as forgivable. So it's the only portion of payroll that is not forgivable. Anyone that receives tips, commissions, bonuses, all of that is considered their part of their wages and should be included when you're calculating your average monthly payroll for the year. They asked if a person can get unemployment and payroll protection. No, because unemployment means you're not getting paid by your employer, so you cannot receive, should not receive both. And you shouldn't apply for unemployment if your employee should not your employees should not apply for unemployment if they are receiving a paycheck. Yeah, so when you're calculating your average payroll, you just divide it, you take all of last year, divide it by 12, and then multiply times 2.5. Just be sure that you're including your health insurance premiums and all wages and taxes as well. And that all goes into that one box that says average monthly payroll on the application. And your lender can help you with that as well. I know some banks have their own spreadsheet now where you just give them the information and they will actually calculate that amount for you. And so here's a good question. What services count as utilities? So typically utilities are gas, electric, and water. If there are any additions to that, such as telephone, internet, or sewer, I don't have any information on that, but for sure, gas, electric, and water. But I have not seen any guidelines stipulating how to define utilities. If you have two doing business as DBAs, but they're all under one LLC, that's one application, because that means you just have one federal ID number. And part-time employees do count as part of the head count for the number of employees. So they have a question here about, is lost revenue considered in the forgivable loan? No, it's not. There is a question on the disaster loan about how much you have lost so far, but that is not, that's not part of the calculation on how much is forgiven for either of the two loans. So as far as landlords go, there are no requirements or guidelines stating that you must give any leniency at this time. So that would be completely a personal choice for landlords as far as for your tenants and their payments. But as a landlord, you have commercial rental property, which means that you may apply for the disaster loan as well as the Paycheck Protection Program. So of all the people that I've worked with, about a dozen clients that I know for sure who have applied for the disaster loan, only one has actually received a confirmation email. All the others haven't received anything stating anything at all. So they haven't heard at all from the SBA. The SBA had initially said that if you check the box for consideration of the $10,000 advance forgivable loan, that you would hear from them within 3 days. That has not happened to any of my clients. And my understanding from a call I had this morning with the SBA is it's not happening for anybody yet. They're just overwhelmed. So 3 days was their expectation of their turnaround time, and they're just not able to meet that. So I'm sure they're gonna change that wording soon. And yes, for your average utilities and your other rent and lease expenses for your business, 2019 is the year that you're using, and you're going to average that for the year. So take the total, divided by 12, that's your average monthly. There's a question on here about, can workers' comp and liability coverage be added to payroll costs? My understanding is yes, but I will double check on that for you, and I will send that out with Natalie at the end of this. That plus the full-time equivalent hours. I'll double check on both of those. So there's a question about, if you've already closed and you haven't been paying your employees currently, can you still go in and apply for the Paycheck Protection Program? And the answer is yes. Once you do so, then of course you have to bring back those employees and begin to pay them with those funds that you receive for the next 8 weeks after you receive those funds. So, but yeah, that does not disqualify you just because you've already laid people off. You can bring them back. And that's the goal of the program, is to keep people employed, keep people paid. So for number of employees, you are calculating the average FTE over the 12-month look-back period, unless the application states differently. It is for the last 12-month average. There's a question about self-employed business owners apply for unemployment. Should you? Yes, the state of Missouri is not paying self-employed people unemployment, but the federal government is. So the feds have $600 a week laid aside for people for unemployment, and that includes those who are sole proprietors, self-employed, and subcontractors. But the state of Missouri, as it stands, is not paying unemployment for them. And we don't know yet how you're supposed to apply for the federal funds. As of yesterday, I spoke with Sherry Shinnerwick with the Missouri Department of Economic Development, and they didn't know if it was going to be a separate process for employees to apply with the federal government versus the state for unemployment. So that's still in the works. If the owner receives a paycheck, are they considered an employee? If you pay yourself an actual paycheck, yes, you are. For the purposes of the PPP and the EIDL both. Can you hire new employees, and if your old employees are scared to work or won't come in? Yes. So there's a question about whether or not the forgivable part of the EIDL as well as the payroll, since it is income that you received, if it will be taxed or not, and I do not know that. I don't know. I don't know if that will be taxed as income for your business or yourself. I'm not sure. If you have a salaried employee, do you count them as 36 hours a week to average in with other part-time employee hours? It really doesn't matter, because they're asking you for the headcount that you have, as well as your average payroll, not your average hours worked. If an employee prefers to stay or go on unemployment because he or she can make as much and still not work, do we have a resource on that? So if they're able to work, then they should work. Unemployment should be for those who are not able to work because they can't, because their business is closed. Like there are restaurant workers who cannot work. So those people are the ones that the unemployment is designed for. If your employees are not willing to work, then, you know, and you're putting them on the schedule and they're just not coming in, then that's, as the owner, then that's something that you have to take care of however you see fit, meaning they can't certainly stay on your payroll and still receive unemployment, and they can't still be employed even if they're not receiving a paycheck and receive unemployment. So you just need to handle that internally. So there's a question about whether or not they will extend the forgiveness in case this pandemic goes on longer than expected. The Paycheck Protection Program specifically states that it is a one-off. That's it. It is a one-time deal, and it ends June 30th. It's very definitive. So get however much you can. If you're going to apply, get the maximum amount you can, because you will not be allowed to reapply. That is stated very plainly. You can access the Payroll Protection Program one time and one time only. And there is a maximum amount of money that they are giving out. So if you're going to apply, apply sooner